All right, thank you, Dennis. My name is Vincent Gonzalez, and I'm the president and CEO of 777 Insurance Group here in Houston. It's a pleasure to be here with you this afternoon. I've been in the insurance business now for about 4 years, and I absolutely love it. And what I'd like to talk to you about today is I'm going to give you some examples of some what I call financial enemies that we all face, okay? But now I'm going to also give you 3 very important tools that you can use to arm yourselves, okay? So we know that in Ephesians 6:11, the Bible says, put on the full armor of God so that you can take your stand against the devil's schemes. Why are we being asked to put on God's full armor? Why? Because he knows that we will be attacked. We all get attacked in a variety of ways. So today I'm going to be talking about financial attacks, okay? Now bear with me because this is a computer that I'm not familiar with, but I'm going to do my best. Whoops. Okay. So in this slide, can everybody see that?
Yes.
Okay. So in this slide right here, in the financial world, there are all kinds of financial enemies, okay? These are just some of them. We all have taxes. We all have inflation, market risk. If you have money in the market, you know what happens when the market goes up, you make money. But what happens when the market goes down? You what? You lose money. Has anybody in this room lost a little bit of money since the war started?
Yeah.
Yes, okay. A lot of my clients have, and that's why they're working with me, because they're tired of losing money. Disability, okay. Disability comes in various ways. Sometimes we get hit with an illness, sometimes we get hit with an injury and we become disabled, okay? We all have this wonderful way of thinking that, we're going to go on and, live for a long time and everything's going to be healthy, but it takes one trip, one fall, one car accident, and all of a sudden we become disabled, okay? That is a financial enemy. An accident of any kind is a financial enemy. Okay? And of course, nobody escapes death. Okay? That is a financial enemy. The question that we have to ask ourselves is, are we prepared? Okay? Are we prepared to go out in God's name and fight that battle that we get hit with every day? So, what I'd like to give you today is 3 simple but powerful pieces of armor that you should put on to protect your castle. What do I mean by your castle? If we have a home, that's our castle. We have homeowners insurance. If we have a vehicle, that's our chariot. We have car insurance. Did you know that 110 million people in America do not have life insurance or not enough? So when you look at the sketches, we have insurance upside down. We pay $3,000, $4,000, $5,000 a year or more for home insurance to protect our home in case we get a fire, but if we don't, we've lost that money. We pay thousands of dollars a year for car insurance in case we get into an accident, but if we don't, we've lost our money. So we've paid to protect against perils which may or may not happen. There's one peril in life that all of us will face, and that is our timely death. Okay? Now, how many of you in the room have heard about term life insurance? Okay? A few hands go up. How many of you have heard about whole life insurance? Okay? How many of you, raise your hands high, if you've heard of something called an IUL? Very few people have heard about that. So just a very quick recap. Term insurance is a life insurance policy that protects you for a certain amount of time. 10, 15, 20, 25, or 30 years. You pay a small premium because you're paying for pure insurance, no frills, no hassles, okay? If you happen to pass away during that term, the policy pays out. Okay? What happens if you live longer than the term? You've lost your money. It's a bet. Okay? You're betting that you're going to pass away during that time frame. The insurance company is saying, I don't think so. Okay? You may not know this, but 98% of all term policies do not pay. They don't pay out. You know why? People either cancel them, they quit paying, or they outlive them. They outlive it. Okay? I've had a couple of term policies in my younger days that I outlived. Okay? Now, so that's term insurance. Now there's whole life insurance. Whole life insurance is permanent insurance. It's a little bit more expensive, but basically it works kind of the same way. You buy a policy, you pay your premium, you pay your premium, you pay your premium, and then finally when you pass away, then it pays. Okay? Your premium, payment. Premium pays on death. There's an old phrase in the business, it's called no ROI until you die. Okay? Well, here is the best way I can explain an IUL. Okay? If I told you that you had $100 to spend, and you had to spend this $100 on a tool or a weapon that would last you for the rest of your life, no matter what you encounter in life, $100. You have a choice between this knife, or, I'm not going to open this up, but you all know what this is. This is one of those Swiss Army knives that has about 1,000,000 blades on this thing. You can cut things, you can cook with it, it's got a toothpick, I mean, it's got everything, okay? Now, the question is, if you had to spend $100 on a knife that had to last you for the rest of your life, no matter what happens to you, would you put the money here, or would you put the money here? Everybody is going over here. This is an IUL. This is insurance that not only covers you for death, but it covers you for some of the other perils that you might run into in life. Would you agree that sometimes bad things happen to people that don't kill them? Okay, when a person gets cancer, they usually don't die right away. They got to go through chemo and other things like that. That is a financial burden because you can't work. Okay, when somebody has an accident and they have to go to rehab, okay, you're still alive, but you can't work. How are you going to get your bills paid? Okay? Something happens and you lose 2 out of your 6 living activities. You can't bathe anymore. You can't feed yourself anymore. Things like that. Those are called living benefits. When an insurance company pays you while you're still alive, that's called a living benefit. Okay? An IUL does multiple things. I'll give you very quickly the rundown and we'll move to the next slide. Obviously, when a person passes away, it's going to pay, just like any other life insurance policy, okay? But it's got these living benefits, okay, at least the one that we represent. First of all, if you ever get diagnosed with Alzheimer's, it will pay. If you get diagnosed with a terminal illness, and the doctor says, we're very sorry, but you only have 12 to 24 months to live, it will pay so that you can keep living, so that you can go get alternative care if that's what you want to do, so that you can do some of the things on your bucket list with your grandkids if that's what you want to do. There's no limitation what you can do with the money. What happens if you get hit with a chronic illness when you can't do 2 out of the 6 daily living activities anymore? Okay, it pays for that. You're still alive. What happens if you get a critical illness? Critical illness is when you get diagnosed with a cancer, Lou Gehrig's, or if you have a stroke, something like that. Usually, you're still alive, okay? But you probably can't work. It pays for that, okay? The last thing is that part of your premium goes to life insurance. Part of it goes to what's called a cash value account. It bills it bills gains. It follows indexes like the S&P 500. What that basically means to you is that your account starts growing. When the market goes up, your account goes up. What happens usually when the market goes down? You, starts with an L, lose money? Okay? On an IUL, you don't. There is a stop to it. Instead of a roller coaster that goes up when the market goes up and comes down when the market comes down, the money in your IUL looks more like a stair step. It goes up when the market goes up, but when the market goes down, it parks itself. It stays right where it's at zero. Okay? When the market goes back up again, your money starts climbing back up again. Now, what does all that mean to you? Well, I'll give you a perfect example. I have a 32-year-old couple who they each got their own IULs. At the age of 65, the man is going to turn on his income for life benefit, and that policy is going to pay him $65,000 per year, tax-free, until he passes away, even if he lives to 120 or more. Okay? The lady will be earning about $55,000 a year, tax-free, even if she lives to 120 or more. So you can see there's term insurance and whole life, or for the same amount of money, you can do an IUL. That's why they are becoming so incredibly powerful and popular. Now, back to this. The IUL will take care of these different financial enemies. Okay? It's not something that you can go and walk into and buy like you can go buy a sweater at Walmart. All insurance must be applied for. Okay? So there's a little questionnaire that we'll go through, and my job is to put you with a company that can get you approved. Okay? So that is the first piece of armor that you need. If you do not have life insurance, whether you work with me or not, please get with a professional, get it done, try to get an IUL, because you're going to get more bang for your buck. All right? Now, another financial tool that you can use, this is called an annuity. An annuity is a fancy word for a savings account with a insurance company. For those folks who have piled up a good amount of money for their retirement, if it's sitting in a Chase savings account or something like that, okay, you know that you're probably not getting a whole lot of interest. Okay? If you have it in a CD, you know you're getting some interest. Okay? But let's say it's $500,000 and you retire and you decide to pull out $50,000 a year. How long is it going to take for your $500,000 to get, eroded and used up? 10 years. You'll run out of money in 10 years. Okay? An annuity fixes that problem. It's a financial enemy. Running out of money is a financial enemy. And the people that I talk to, the seniors, that's their number one fear. It's not Medicare. There's a plethora of Medicare plans out there. But the number one fear that seniors are telling me, at least, is I'm scared I'm going to outlive my retirement. That's what I'm scared of the most. Now, there's two kinds of people that this will work for. Okay? If you have already piled up a good chunk of money somewhere, whether it's in savings or whether it's in a CD or an old 401k or something like that, you can take that money out and you can put it into an annuity, which is a binding contract with an insurance company. And here's what you get. Number one, the contract says we will never lose your money. So if you put $500,000 in there, you will never lose the principal. Okay? You then can take that money and turn on what they call income for life. They will do a calculation based on your health, based on your age, and a few other things, and they're going to say, okay, if you put this $500,000 in here, we're going to pay you, I'm just going to make a number up, okay, $40,000 a year for the rest of your life. Okay? Now, what happens if you live to 120? They're still on the hook. Okay? Do the math. Your money may have run out, but now they go on the hook.
Is that taxable?
No, that becomes their money at that point. Okay, your principal is always protected. Your principal is always protected. When you activate income for life, you draw down some of the interest that you've accrued, a little bit of the principal that you've accrued, but if it all runs out because now you're 110, you're still going to get paid. Okay? That's the way that an annuity works. Now, I mentioned market risk, never losing money. That's part of the contract. Okay? What that does is it generates a constant paycheck. Now you can either get paid once a year. Some people prefer to get paid monthly. Okay, however you want to get paid. Now, why do I call this a financial instrument? Well, because it protects you from the financial enemy called running out of money at retirement. Okay? It also protects you against market risk. I'm working with a client right now in the Clear Lake area. When we first started talking, this was about 2 months ago. He had $690,000 in an old 401k. Doing great. What happened about 3 or 4 weeks ago? What started? The other side of the war. War started. All of a sudden, that old 401k starts doing this. He called me 2 weeks ago. Hey, Vince, can we get back together? I'm down to 610. Yeah, sure. Okay. He doesn't have long enough, he can't live long enough to make that money back up in a regular market because there's so much uncertainty. So what we're going to do is we're going to take that 610 out of the 401k. We're going to put it into an annuity. It's going to be safe. He will never lose it. And he can either leave it in there making guaranteed interest, or at one point, he can choose 1, 2, 3, 4, 5, 6 years from now, he can call up the company and say, you know what, go ahead and calculate my income for life. I think I want to go ahead and activate that. They already know. They give you how much money you're going to make every year in advance. So you know if you're making $35,000 in year one, if you start drawing the money in year one, it's going to be $35,000. If you wait 10 years, it's going to be $75,000. You get all that in advance. So he suffered enough. He's going to pull that money out. We're going to protect it. So we're talking about protection here. An annuity is an insurance policy to protect your money. The IUL is a policy to protect your life. Okay? The bottom line, you can't control how long you live, but you can control whether your income will last. Okay? All right. This is not what I call a direct financial enemy, but it's a really close relative. Okay? If you do not have a will or a trust, you will run into delays and you will run into some financial difficulties. One of two ways. Right off the bat, you will need to get a probate attorney. Okay? Last time I checked, they're about 5% of the total estate. So if your estate, meaning the value of your home and your cars and your cash and jewelry and all that stuff is $1 million, 5% of that is $50,000. That's about what your family is going to have to pay out in cash to the attorney to work your case and to take it through the probate court, which will take months. Okay? What happens if your family needs access to the savings account that you got over there in order to keep living? They got to wait. Sorry. You got to wait. You got to wait until it goes through probate. Okay? What happens if you really wanted little Johnny to go to that grandpa and grandma over there, but you didn't put it in writing, and now there's a big fight between both grandparents? Have any of you ever seen or heard of a family that breaks up, splits up, or starts arguing and fighting after somebody passes away? All kinds of conflict. Okay? 10 more minutes? Okay, perfect. So, what I would say is, I'm not a lawyer and I don't play one on television. But I will tell you that you are doing real good if you could get yourself a will and a trust. Now, for those folks that, I'll get to your question in a second. For those folks that whose estate is, say, $1 million and less, one of my insurance carriers, will give you a will and a trust for free. Okay? It's part of your insurance coverage. I use that a lot for some seniors, but I use it a whole lot for young families that are kind of going paycheck to paycheck or don't have a lot of money to go around. Okay? They can't afford $1,200, $1,500 for a will, and they sure can't afford $5,000 or $6,000 for a trust. Okay? So I put them with that carrier, and as a benefit to my clients, they give them a will and a trust. Okay? So we can help that way. But here's what it basically does. When you don't have a will or a trust, you're now getting into court control. Again, I'm not an attorney and I don't play one on television, but when you don't have these documents, something happens, all your stuff needs to go to court, and the court and the state will decide who's going to get what and when and how much. Okay? If you have children involved in that, that's really bad. This is going to cause delays and expenses. I mentioned the attorney. Okay? Family conflict. Oh, no, wait a minute. Dad said I could have the Rolex. No, he told me a long time ago I could have the Rolex. It's not in writing, so it doesn't count. Okay? Unintended outcomes. Unintended outcomes. The most famous unintended outcome that I heard of from a client was their adult son was going to inherit everything when mom and dad passed away. Mom and dad did, in fact, pass away. Son did inherit everything. Son's wife decides to get a divorce. Son's ex-wife took half of everything that should have been all for the son. Do you know that that could have been avoided with a properly structured trust? That could have been a provision in the trust. You live and you learn. Also, lastly, if you don't have this and if you do wind up in the court, all your personal business is going to be public record. Okay? Now, you can avoid all that. Again, I'm not an attorney. Don't play one on television. By having a will or trust. What does that do? Number one, you stay in control. There's faster distribution of your assets. Your family doesn't have to wait months and months and months to decide who gets the ring, who gets the car, who gets the house, who gets the savings account. Okay? It all happens like this. Okay? It reduces the stress for your family because there's clear instructions. There's no more fighting because it's in writing. Okay? And finally, it protects your legacy. You get to decide where you want your things to go to, and that's it. You have the last word on that. Okay? Bottom line, if you don't make these decisions, somebody else will. Okay? Now, when you do all this stuff, again, I gave you 3 pieces of armor. Okay? At a minimum, you should do this. Get yourself a life insurance protection. Get yourself a will and a trust. If I can help you with that, with my carrier, I'll be happy to talk to you about that one-on-one. And then, of course, if you have somebody that you're scared about losing and you're tired of losing it, or you want it protected, you want it to grow, whatever, you want it to last all your life if you think you're going to live to 120 or more, then that's an annuity. Okay? Now, when you do those 3 things, you've covered pretty much all of those financial enemies. You have fought the fight, okay, because you were prepared. Remember, no matter what I show you up here, this is called no plan. This is called a good plan, okay? Now, I had so much fun putting this thing together for you all last night because I just know they're going to ask, who's the guy in the night outfit? I know y'all going to ask that.
Vincent.
Yes. I mean, honestly, when you look at it closer, man, this thing put way more wrinkles than what I have. But, you know, I can't complain about it. But my name is Vincent Gonzalez. I'll be happy to be your trusted guide. Let me tell you something. I tell people all the time, I don't sell insurance. I don't. I guide people. Okay? My life has been full. My life has been blessed in so many ways. Okay? But I don't sell. People don't like to be sold. People like to be guided. Okay? I like to guide people. I like to help them in any way that I can. That's where I come from. So if I can ever be of service to you, I'm happy to schedule a one-on-one consultation with you. If you have a church that you'd like for me to come and speak to, I do these little workshops. Nothing is ever sold. This is all educational. Chris Carlin will tell you, I've done some of these. I've done some at Christ the Redeemer, Queen of Peace, St. Loyola. I even went and talked to the employees at the Chancery about Medicare 101. So I do three things. I help people with all kinds of life insurance. I protect their money. And I help them with their Medicare. So at the end of the day, my job is to help you protect your family, your finances, and your future. I have one last thing, but I can't memorize this, so I'm going to read it to you. As Catholics, and I really believe this from my heart, as Catholics, we're taught that everything we have is a gift, and gifts come with responsibility. Planning is not about fear. It's about love. It's about protecting dignity, reducing burden, and giving our families peace of mind. Tools like life insurance, living benefits, and lifetime income aren't about getting rich. They're about being prepared. Prepared to care for ourselves, prepared to care for our spouses, prepared to bless our children and grandchildren. Today, as you've seen, isn't about selling anything. It's about understanding your options so you can make prayerful, confident decisions when the time is right for you. We insure our homes and our cars and even our cell phones because they matter. But I'm going to tell you, planning for life and family and dignity, that matters even more. Thank you for being such a thoughtful, faithful group. It is indeed an honor to be here with you today. I'm here to serve you in any way possible. Thank you, and God bless you, Chris. Thank you for having me out. I always love speaking with your groups.
Thank you so much.
Thank you, everybody.